I think the key thing is I think you've heard a lot from me about the magnitude of what is happening, how fast it's happening, and that everybody from the incumbent financial system to new disruptors, to brands, to cultural things, to central governments, to central banks, everybody is involved in this space. It's not going away. It's not a fad. Just remember where we are in the macro cycle. Remember that these things take time to go from where they are now to full adoption. If we continue at the pace that this has been adopted, we get to about 1 billion people by 2024 and probably 3 billion by the end of the decade.
Raoul Pal is the co-founder and chief executive officer of Real Vision and global macro investor, and has been deeply invested in the cryptocurrency space for around a decade. As an investment strategist with decades of experience, including co-heading the hedge fund sales in equities and equity derivatives at Goldman Sachs, Pal regularly works with various financial institutions, family offices, sovereign wealth funds, and other top institutional investors. And he believes there's increasing interest among these big money investors in the crypto space. The reason for this is not far-fetched. The cryptocurrency industry is quickly shaping itself into a major part of the global economy, a part that could easily overtake existing industries and massively benefit investors who come in at the early stage. 30 or 40 or even 70% declines won't matter. Pal adds, when the industry is gearing up to double its current size in multiple folds within the next 5 or 10 years. In addition to the mouth-watering offer of a 50 or 100x increase, Pal also discusses how big the entire cryptocurrency space could get by the end of the decade, with a mass influx of all sorts of big money investors. His simple advice for existing investors is to keep their eyes on the prize and look forward to the insane growth of the industry within the coming years. We will now take you to Raoul Pal's interview as he discusses the potential of the cryptocurrency industry in the extremely digitized world we are entering. Please watch the video to the end, hit the like button, and subscribe to the channel. Also, ensure you drop your comments and observations in the comments section below and turn on post notifications to watch more interesting discussions featuring Raoul Pal and other top names in the cryptocurrency industry. Thanks, and enjoy the video.
So it's going to happen pretty fast, particularly as these central bank digital currencies start rolling out and other initiatives start rolling out. So don't take your eye off the prize because everything feels miserable right now. These are the opportunities that you don't get given often. And I'm not taking a view of whether it, can't fall another 30%, even 50%. But if you think the upside is 10, 20, 50, 100x over the next 10 years, then this is the best risk reward you will ever see. Okay, what do we actually have at Real Vision? Real Vision had created, we led the world in the creation of long form financial interviews and analysis. And we grown a passionate community who cared about finance and crypto and macro and all of this stuff, and they wanted to talk to each other, and they felt part of Real Vision. And I realized we had something special, and I realized that back in maybe 2019, 2020, and then as NFTs and social tokens and the other applications of blockchain technology, I realized that the future of all businesses is actually going to be community. Community is the business model that is sticky, creates loyalty, and where you participate in the network with your users so they can have benefits from being part of the network, as opposed to the extractive system of, let's say, Facebook, where, yes, we get free utility, but the shareholders get rich and you don't. And it creates this rich poor divide. But what blockchain allows you to do is when you own a token, you own a participant share in that network. And therefore, if the network goes up in value because people are using it a lot, then the value of the token that you own goes up. So that applies to all business models. So it becomes really interesting to think of community as the business model and then unlocking it with Web3 technology. So once I realized that, I knew that this had to be done because everybody will go there, because if you're allowing others to participate in your network and capture a share of the value too, your network's going to grow faster. It's as simple as that. And so we realized that this was a great thing, and there was a lot of fun we could be had with this, not just from having NFTs, but about what else can we do? How can we coalesce people of like-minded interests into groups that want to do certain things? And we've got one which is going to be, which is that already we've got a bunch of NFT holders who are creating a portfolio based around asset allocation of cryptocurrencies. Eventually, maybe we tokenize that idea. We're also going to look at doing a trading league where people show their performances online on chain, and you have a competition. You can run that competition, and then eventually the right people, we can put them on another platform, and you can tokenize asset managers on platforms like Enzyme. So there's so many things that we can do with this, and nobody knows where it's all going. But allowing everybody to be part of the network, participate in the network, and have this ownership, both mentally and physically, of it is a really powerful thing. So that unlock was huge. And once I saw these business models, there's two things I realized is that all the financial system is going to go here.
From cryptocurrencies to NFTs, the metaverse, and the entire digital asset space, it is clear that there is a drastic overhauling of the traditional financial industry. And it couldn't have come at a more opportune time with the entire global economy on the very brink of collapse. For example, in Lebanon, where citizens are robbing banks to get their deposits, citizens are saving by buying Bitcoin and using Tether to buy groceries. According to a recent CNBC article, the decentralized and borderless digital currency industry operating outside the reach of politicians and bankers is a taste of freedom and liberation amid the chaos and confusion. The article tells the story of a Lebanese architect who earns around 50% of his income in Bitcoin and uses the other half to buy some more Bitcoin. With the local currency losing 95% of its value since August, many other Lebanese are trading Tether for cash and mining Bitcoin for survival. Something quite similar is happening in Argentina, Venezuela, Nigeria, Turkey, Sudan, Sri Lanka, and many other countries where fiat currencies are being run to the ground due to poor and corrupt monetary policies. Let's get back to Raoul Pal's interview as the macro guru further discusses what he envisions for the cryptocurrency industry within the decade.
This is a huge adoption of technology, and most of the financial institutions hadn't yet invested. Only some of the family offices and high net worth who could take more risk or more nimble, they could do it. But the big firms hadn't, and they want to allocate capital to the space, but they weren't yet able to. And I looked at the hedge fund industry in crypto, and it's about $4 trillion and $1 billion. And then I look at the traditional hedge fund industry, it's about $3 trillion. And I'm like, wow, this entire space, which was, at peak, a few $1 trillion, was so underinvested by capital and professional investors like hedge funds. They just hadn't raised capital in the space because it was really difficult for people to allocate to single hedge funds because they didn't understand what they did and what's the custody risk, what are these wallet things, how does it all work. But I thought, well, the best thing to do is to create an asset management vehicle to allow people to invest capital in a more diversified way across a bunch of different hedge fund strategies. So you've got experts running your portfolio, experts at our level who are making portfolio allocations and doing the risk analysis of the hedge funds. And so that's a way that larger investors can put more money at work and start capturing the alpha in this space, because there's enormous amounts of alpha because there's so few professional investors in the space. It's mainly retail investors plus a few trading firms. So that was one business, the exponential age digital asset management that we're building out today. On the other side, I realized that every business model in the world was going to change and that culture was becoming the new asset class, and NFTs were showing the way, and that culture around music, sports, film, TV, book franchises, and fashion were the massive cultural communities that were global, and that those were likely to tokenize, because if you get people as part of your network, you create a much more robust system because you have a direct relationship with your customer. You're not paying Facebook to deal with them. You're not giving away money to middlemen. And what you're doing is creating much more loyalty, engagement, and value for everybody. So not only the artist, the sports team, or the fashion brand makes the money, but everybody does by owning the assets in that ecosystem. It's kind of a Hermes handbag as part of that. Somebody will have a Hermes handbag because it proves they're a member of that club. Obviously, they've wildly overpaid for it, like you overpay for a Bored Ape Yacht Club, but it shows you're that person, you've signed yourself with that brand. There's no reason that can't be digital as well. And that, I think, unlocks a huge amount of value out of culture and brand that doesn't exist in this world. These things are currently intangibles on a balance sheet. But if you look at something like Disney today, which is a $250, $300 billion company, what is the intangible cultural and brand value of Disney? If you were to tokenize all of its franchises and all of its ecosystem, if Disney had its own system of currency, how much of it's worth? It's probably $1 trillion, maybe $2 trillion. So that's how much value gets unlocked of new GDP that didn't exist, which is the cultural thing. And it also solves another problem. As humans are being pushed out of the workforce by robots and AI, what role do we play in a digital society? The role we play in a digital society can be participants in the network. We can be people who are community members who add value to the community and get rewarded by the community. So we can operate within these ecosystems of our favorite brands, much like kids are trading sneakers these days. There's a lot we can all do to operate within, 4 or 5 communities that we really care passionate about, whether it's a pop star or a sports team, and to help grow that and to keep it vibrant and alive, and you'll get rewarded for that. And then you can spend those tokens within that ecosystem. And what you've got is a way for people to earn like a universal basic equity online for the participation in these digital sovereign states or digital communities based around culture. It's really interesting. And people have no idea how fast this is going and where it's going. And the fact that pretty much every massive brand that I know, including all the Web2 companies, are all deep down the rabbit hole on this.
What do you envision for the cryptocurrency industry and the entire digital asset space within the decade? Do you have any short or long-term price predictions? Please let us know your predictions and thoughts on Raoul Pal's interview in the comments section below. Also, ensure you've hit the like button, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.